And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story, real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And welcome to the show this morning. Of course, it's the Hump Day edition of The Real Investment Show. That also means Danny Ratliff here to join me this morning, and we're going to talk about just how much money you need to have to be considered rich. It's a lot more than you think, especially in today's economy. Anyway, we'll get into that this morning. Of course, yesterday was an interesting day overall. Now, we've had a couple things that are going on as of late, just economically. Not really any economic news out today to speak of. Tomorrow we get retail sales. So again, one of the things is we did mention this yesterday is that retail sales is 40% of PCE 70% of GDP, right? So very, very important in terms of economic growth and kind of what's going on. But everybody's going to be looking at that retail sales report tomorrow to really kind of determine the strength of the consumer and what this, this whole kind of soft landing economic scenario that we're in. Is that sustainable, or is there, more risk here? Interestingly enough, despite the fact that economic growth is doing fine, right? And we've, the Atlanta Fed GDP is talking about a 3% growth rate for the quarter three. Everything seems to be okay. Unemployment is certainly, the unemployment rates come up a bit, but still very low historically. Jobless claims remain very low. So it doesn't really seem to be any real issues, but yet Federal Reserve policy as well as global monetary policy has sharply reversed into more accommodative motion. In fact, if we talk about on the show a lot about the importance of liquidity and the impact of liquidity on markets. And liquidity has absolutely been surging over the last several months, which is why the market has continued to really rally this year so much, is because central banks globally are cutting rates and introducing liquidity. Now, China, of course, adding to that liquidity flow. So again, that continues to support higher asset prices because that liquidity has to go somewhere. So it's flowing into various asset classes of the market. And this is what we talked about before. It's kind of an everything market. No matter what you own, it's been going up. So everything's great. That's, the challenge, though, for investors is saying, okay, well, if everything's so great, why do we need so much liquidity, right? What are we missing? What are we overlooking here that may be going on? And again, it's a challenging question. Yes, we can talk about debt. We can talk about interest rates. We can talk about inflation. But that doesn't really seem to be a big problem for markets right now. Doesn't seem to be a big concern of central bankers on the surface, right? They're not really too concerned about it, but kind of underneath the water, it's like a duck, right? The duck's just paddling frantically, and we've got this tremendous amount of liquidity flow returning to market. So again, we'll see how this plays out, but as we talked about previously, liquidity is what drives markets, and the more liquidity you have, the more markets drive. So there you go. 2 weeks. Actually, 10 days. 10 days from now, corporate stock buybacks return to the markets. 21% of buybacks will be executed between the beginning of November and the end of the year. It's the two largest months for buybacks of the year. And as we talked about yesterday, I said it was going to be $5 billion a day. I have a correction for that. It's $6 billion a day over the next 2 months. So again, and this is because we just continue to increase the amount of buybacks that need to get done. So you're going to have $6 billion worth of liquidity from buybacks coming into the markets. Now, I'm going to write an article on this coming up because, again, we've written about buybacks before and how buybacks are a benefit for insiders of companies, but not really shareholders. And this is kind of one of the big myths of the markets is like, corporate share buybacks are a return of capital to shareholders. No, it's not. A tender offer is a return of capital to shareholders. That's when you get a letter from the company saying, hey, we are offering to buy your shares from you at X price. And you have the right to tender your shares directly to the company. In that exchange, you actually receive capital. That is a return of capital to shareholders, just like dividends are. You actually receive the dividend. Buybacks aren't. So again, clarifying the differential between these two is extremely important. While the narrative says, oh, this is a return of capital, it's not. This is solely a benefit to insiders and corporate balance sheets. So again, it's just something to pay attention to, but corporate buybacks are a very large driver of market prices. And again, this is why buybacks originally were banned for many, many years. Post the Depression, buybacks were banned until the late 1990s because they were considered a form of stock market manipulation because it moves asset prices when you're buying back all your shares. Anyway, here's what you need to know before the bell. Talked about previously, we had added some exposure to our energy stocks back when energy was very, very beaten up. And we said, look, we'd been through a very big correction in oil prices, something would happen, and you'd see a pickup in oil prices because of whatever reason. That's exactly what happened. And of course, as oil prices go up, interest rates also go up because there's a very high correlation between oil price and interest rates because of the impact on inflation expectations. And so again, not surprising, there's a decent correlation between the direction of interest rates and oil prices. So a lot of people are like, I don't understand why interest rates are going up. Well, it's because a lot of it was oil prices and the inflation expectation from higher oil prices. That, as we talked about, that rally got very extended, got very overbought, and has now flipped, of course, with news out of Israel that they're not going to target oil fields in Iran. That's basically changed the tenor of oil prices. Those have dropped rather sharply here over the last few days, triggering a fairly high-level MACD sell signal. This suggests that oil prices could travel lower here over the next couple of months. And again, at the end of the year tends to be a little bit weaker for oil prices anyway. So we're going to potentially see weaker oil prices here. That's going to translate, obviously, and this started yesterday with that drop in oil prices. Of course, the bond market was closed on Monday, so the bond market didn't really get to respond to anything until yesterday. But yesterday we had a fairly decent sell-off in bond prices, increase in bond prices, sell-off in bond yields, and again, working off some of that overbought condition. But if the direction of oil prices continues to decline with that impending sell signal that we're getting oil prices, that's going to suggest also that yields are going to fall here over the course of the next few weeks. And that wouldn't be surprising anyway. We kind of had a very extended overbought condition in yields previously. That, again, it's kind of an inverse relationship. They've now gotten very, very oversold. So now, again, what you're looking for is just that technical reversal that'll occur in both bond prices as well as oil prices, because again, we're just working through that process. Of course, what's going to happen ultimately is that as the impact of inflation fears continue to decline, that's going to be supportive of asset prices. Markets, though, as we talked about yesterday, still overbought here. That sell-off yesterday, we had gotten overbought, as we discussed earlier this week. And again, we're still in a buy signal here. So again, but that buy signal is at a fairly high level. And as we talked about yesterday, doesn't mean you can't get a correction even though you're in a very bullish trend of the markets. And we're still within a very defined bullish trend, but a correction back to the 20-day moving average would not be surprising here. So again, if you're looking to add exposure to your portfolio, you might want to be a little bit patient for a couple of days. We are going to be moving into earnings season. This morning, ASML, which is in the semiconductor space, lowered their guidance. That stock's going to be down fairly sharply this morning. That's going to drag the entire semiconductor sector down this morning as well. That's going to pull the entire tech sector down as well, because they're also linked together. So again, do expect weaker markets this morning, but that wouldn't be surprising. Again, we got to work off some of this overbought condition before we'll have a better opportunity, potentially over the next week or so, to put some new capital to work. But that's kind of just navigating markets right now. But again, right now we're looking to be in a good position, lower yields, higher bond prices, potentially a correction of stocks with a better entry point by the end of the month. We'll kind of measure how it goes. That's what you need to know before the bell this morning. When we'll come back, we'll pick up with Danny Ratliff and talk about how much money you need to be considered rich. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Medicare open enrollment starts October 15th. If you need Medicare insurance coverage, RIA advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA advisors' online resources and one-on-one partners. to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the Insurance tab at realinvestmentadvice.com today. Realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So my son called me from college yesterday, being a little bit down, right? I'm like, what's going on? He says, I don't know. I've just been feeling a little moody, a little run down lately, and, it's just been kind of tough. I go, yep, sounds like you have the symptoms of adulthood. Welcome to adulthood.
Oh, that's great.
They're so excited about growing up and, getting out of college and getting their career started. I go, you do realize that when you get out of college, that you're going to be doing the same thing every day for the rest of your life. And when you put it that way, adulthood really doesn't sound like all that much fun.
Yeah, it's amazing. So I got to visit with them a couple weeks ago.
Yeah.
I can't figure out how he came from you. I mean,
I can't either, honestly. The kid is a mathematical whiz. I don't know where he got it from, but
eternal optimist. I mean,
yeah, exactly.
Great head on his shoulders. I'm like, who's your father again?
Exactly, not me. And I'm just that's a different story. No, he's a good kid, but he is so wicked smart. That's his problem is he's so wicked smart that he's always trying to,
find something new, or he gets bored.
Well, that, or he cuts corners. It's like, I don't need to like more than once. One of my best stories about him is that he was a senior in high school. I got a call from his principal that he failed his math test, his math final. And I'm like, there's no way that kid fails a math final. He makes hundreds on everything in math. I mean, and it's just impossible. And he's like, well, he failed, and the reason is he was cheating. I was like, there's no way that kid's cheating. And so I said, I'll solve this, but what does he need to do? He can make it up, but he's going to have to go serve 10 hours of service and all this other stuff at the school. I'm like, don't worry, he'll be there, he'll do it. So I'll go talk to my son. I'm like, okay, Tommy, how did you fail your math final? And he looks down the floor and he looks back up and he says, I turned in the wrong test. I go, what do you mean you turned in the wrong test? He says, well, I charge $20 a person, and I take everybody's test in math, physics, and chemistry. And he was making, I didn't realize this, but he was making like $2,000 a semester, taking all the finals for everybody. Well, they randomize the finals. So they're the same questions, but in a different order. And there was another kid named Tommy, and he turned in the other Tommy's test instead of his. And so that's how he got caught. But I was
lesson learned.
Well, lesson learned is that pay attention to the details. Details matter if you're running a business taking tests for everybody. But yeah.
Oh man.
Anyway, he learns a lesson.
You gotta love his entrepreneurial
Oh, yeah,
spirit,
yeah,
but
no, he
maybe more
was
on
out
the
there.
up and up next time.
Yeah. No, everything he was doing was, well, it wasn't up and up. I mean, he was taking tests, but he was making money. Speaking of making money, there's an interesting article out, and I want to talk with Danny. It was on Market Watch, and it's called "You're Not Upper Class in America Until You've Reached This Coveted Status." And I think it's interesting, Danny, because you read all these kind of stories and Market Watch or CNBC or and other kind of financial magazines, et cetera, talking about it's like how to get to $1 million, and how to save your way to $1 million, and all this. And there's if you just save this much money, you'll be a millionaire by the time that you retire. And it's quite interesting because $1 million is not what it used to be, obviously, right? In 1980s, $1 million would generate 12% a year just buying treasuries. Today, that's not possible anymore. The cost of living has gone up dramatically. So I'm not sure if you have $1 million is that you're really all that well off anymore. It's the cost of housing, cost of living, et cetera, is just all continuing to increase. And so being considered, kind of upper class, you would think like, oh, they've got $1 million, they're a millionaire, they must be upper class. I'm not sure that's so much the case anymore.
No, it's not. In fact, Charles Schwab did a wealth survey, and it said that now people believe they need $2.5 million to feel like they're technically quote unquote wealthy. And people hear these numbers, and I think they get discouraged. It's very easy. And so this article you're mentioning here, it's talking about it's not just those that are, the lower income class. It's the middle class. It's even some of the upper class, because we have this lifestyle creep that continues to occur. And essentially, you can make arguments that there are people that are making $40,000. There are people that are making $100,000, $200,000, and each and every one of them feels like they're just tethered to a treadmill because they can't have anything go wrong. And unfortunately, we're in this environment, this day and age where, we put the cart before the horse. And even when we talk about finances, we hear so often, oh, put money in your 401k. That's the first thing you need to fund. But they've neglected to save money in an emergency fund or a financial vulnerability cushion or for the new home. And now we're being taught that, oh, don't worry, we'll take that distribution out of your retirement account for your down payment for assistance. And that's not the way this needs to work. And so the problem is that when you talk about people at these upper income levels, which anybody who makes less is like, hey, sign me up. I'm ready. Put me down for that income. But unfortunately, one thing that we teach is that, hey, if you're starting off in the workforce and you're getting a bonus or you get a raise, put that money aside. Live just like you were living now. But unfortunately, especially in the, in a lot of different careers, managers, bosses, they will say, hey, it's time for a new car. It's time for a new home, because they want to incentivize you to continue to work really, really hard so that it impacts the bottom line and it helps their bonus and help them get to the next spot. The problem being is that we have that lifestyle creep that just continues to happen, and we have not done the fundamentals of those quote unquote financial planning to get this stuff done. And that's why, Lance, if you look at this, the numbers are staggering. And if you think about it, you have families that maybe you have a dual income household. One wants to stay home, but they feel like they can't just because the cost of everything has gone up so much. Sure. We see the studies on, what does a starter home cost? Think about how unaffordable that is for most people that are getting out of college or, we see people delaying. It's not like people are buying their first home in their 20s. They're doing it in their 30s because they can't afford it. And the upkeep, the maintenance, all of the other things that go along with it. So I think there's a big segment of the population that is extremely frustrated, and it's not just, we hear about how the middle class is disappearing, and in a lot of ways we've done it to ourselves. In a lot of ways, inflation has hurt them as well. So now not only has lifestyle creep really getting to people, but just trying to make ends meet is even a bigger problem.
No, I and it's interesting to me because I talk to a lot of people, obviously, and for a variety of things, and I find it interesting because I see people, they're driving around in really nice cars, they live in nice houses, and then when you talk to them about their financial situation, they're basically just barely struggling to stay above water, right? They have all these great accoutrements of life, right? But they're just one paycheck and they're done, and there's no, like you said, there's no cushion there for potentially losing a job or just having a financial setback of some sort, because everything is levered in their life to sustain this lifestyle, but they don't have any savings to speak of. And it's kind of like this attitude is like, oh, I'll get there later, right? I need these things now.
We'll always
right?
get there later.
And I'll catch up on savings later, but then, the house has to be bigger for some reason, or the cars have to be nicer for some other reason. And, there's just all these kind of bad financial decisions that go a long way. On paper, they look very wealthy, right? If you total up their net worth on paper, it's like, wow, they're very wealthy.
No. Until you extract all the liabilities from it, that's the key.
Exactly, yeah. And no, it's interesting, too, because I have this conversation a lot with, my kids. We lived out in Katy. So if you don't know where Katy is in Houston, it's a suburb of Katy. It's the same way out. I'm sure it's in the Woodlands as well. But there's a lot of wealth in these outer suburbs of Houston, Texas, right? So once you get outside the city, there's a lot of wealth that's contained out there. And you see people driving around in nice cars and all this type of stuff. And when my kids were in high school, when they turned 16, they had to buy their own car. And so we would match their down payment. So they had to save up to get a down payment. We would match their down payment. Well, they couldn't save much, so their cars weren't that nice. But their buddies at school were driving G-Wagons and Corvettes and Camaros and, very, very nice cars, brand new, by the way, not used, cars to school every day. And they're 16 years old driving a G-Wagon, right? and they get this kind of view that, oh, well, that's the way life is. And that's not the way life really is. And, when they had to start buying their own stuff and paying their own and this is why we made them do it, is to give them a grounding in reality of this is what really goes on in life. What you see on Instagram and the internet and social media and all this other stuff is not real life. So we made them do these things to help them get a better grounding and the value of the things that they have. And they now appreciate that better. But again, as we got to know their other people, his friends' parents. Yeah, their kids were driving G-Wagons, but exactly back to my point, they had so much debt that when we were talking kind of amongst ourselves, it's like, yeah, man, it's just, I'm barely making ends meet right now. And I'm like, but you live in a $3 million house and you drive a G-Wagon. What is wrong with this picture? That was what was going through my head, right?
Yeah, no, I see that all the time. I mean, my wife sits in the pickup line for the kids and she's like, she'll send me a text or call and like, how do these people do it? And I'm like, I know exactly how they do it. And I get the same conversation often, like, hey, do you know how should I refinance this? What does loan, what does debt look like here? And, I think debt can be used in a really, really good way when you know how to use it. Now, the problem is that people are using that just to maintain lifestyle. And unfortunately, you said that's not real life. The problem is it is. And that's why these numbers are so bad, because we're not doing what we should be doing at the beginning, at the start, and then continuing that good behavior.
No, that's right. All right, we'll finish this conversation up. And I also want to talk about 7 things that you need to be discussing about your financial well-being. And we'll talk about that when we come back from the break. Don't go away.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Medicare open enrollment starts October 15th. If you need Medicare insurance coverage, RIA advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA advisors' online resources and one-on-one partners to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the insurance tab at realinvestmentadvice.com today. Realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
Slept right through my alarm this morning. My wife woke me up. I was in the middle of this dream when she woke me up of the alien armada coming to Earth.
The Real Investment Show podcast.
My wife's ex-husband's new wife is a flat earther. She believes the earth is flat. And so in my dream, the alien armada is coming to explain to her that the earth is actually round.
Same show, your schedule.
Nice.
Anyway, I woke up late, so here I am.
Bet you Richard could do a script treatment of that one.
At realinvestmentadvice.com.
I'm thinking more like Mars Attacks. That was the one.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access, like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So if you're hanging out in chat this morning, what was your first car that you had when you were going to high school? Mine was a hand-me-down from my grandmother. It was a 1962 Chevrolet Impala 4-door, and it had like 12 colors of paint on it.
Ooh, I bet you wish you had that today, though.
No doubt. Yeah, it had a big V8 in it. The car was fast. It would smoke the tires off, but yeah.
Mine was a 1988 Chevy Blazer 2-door, and then my dad, for whatever reason, it had some issues. He said, you know what? I found a good car for you. So my grandmother had a friend who was selling her car, and it was a 1987 Oldsmobile Delta 88. And I was so mad. I was like, what? I just bought this other vehicle. He's like, nope, it's not dependable. But it's funny. I was like driving Miss Daisy because it was, it was a little bit bigger, and in the back, it had like a couch in the back. So everybody wanted to ride in the back. Like, this is awesome.
Yeah.
This is so comfy.
No, it was great.
That car was stolen twice. I'm like, what? It's like a grandma car.
No, it's those cars were great. There's some great ones in the chat right now. 1969 Lincoln Continental. That was a boat.
Yeah.
A Chevy Beretta, 53 International Carryall, 70 Fastback Mustang. That's a nice car. Some of these I wish, and again, Danny, you're right. There's some of these like cars in the chat, and then when I look back at the cars I had back then, I was like, man, I wish I still had that car today.
Yeah, absolutely.
Because back then you like opened the hood and there was the engine, and you could work. We worked on everything, right? I mean, you could fix anything. Now it's just you can't even get your hand in there to change an oil filter. So
now I just don't have time to get my hand in there to change an oil filter.
Oh,
do anything.
I loved working on cars back then, but they're so complicated now. Just
you can't do it. It's intentional, right? All the electronics, the things you have to move. They did that on purpose.
Yeah. 63 4-door Dodge Dart with a straight 6.
Oh.
Yeah.
And it was a slant, as I recall.
It was a slant. I believe you are absolutely correct. 1970s. Oh, this is the one I'm trying to actually find right now. A 1970s Chevy pickup half ton. I'm actually looking for one of those, maybe 72, 73.
I would love one of those too.
Because my garage is too small for a full-size truck, so I need one a little bit shorter. Just the old two-door cab, not the four-door extended.
They didn't even make those back then.
I know. It just...
Or very rarely, yeah. I do have, my father and uncle bought a 1966 Mustang, so 289 engine. It's a 2+2 fastback. And my uncle had to move years ago, and he's like, hey, do you want to buy it or I'm going to sell it? So 20 years ago, I bought it. And I probably haven't done the car justice. It still drives. It's great. It's all original. But it needs a lot of TLC. And so the problem is, while you could work on it, I just don't have the time in this stage of life with the kids. So Michelle's yelling at me all the time. But she has a bad day. I'm like, hey, get out of here. Go around the block. There you go. She loves that thing. So I could never sell it. But yeah.
No, that's great. There's one of our comments is a 72 VW Bug. It's bright yellow. There is a very funny episode. So Jeremy Clarkson, he did the what was the name of its car show? I'm drawing a blank all of a sudden.
I can't remember, but it was a good car show.
Top Gear.
Yeah,
Top Gear.
Right.
So they're doing the final season of Top Gear on Amazon Prime. And in the very first episode, they're driving across Zimbabwe. And in the very first episode, they basically the producers give them as a backup car this VW Bug. And he's like, I'm going to go return this. And so the scene flashes forward and Jeremy Clarkson standing next to this VW Bug and it's on the edge of a cliff. And he's talking to his buddy that's with him. He's like, I don't know how this happened. It's been a terrible accident. Somehow there is a brick on the accelerator of this VW Bug. And there is this wooden stick that is holding the clutch in and the car is in gear. I do not know how this happened. And the guy says, yeah, this is strange. He says, and even stranger is this rope that's tied around the stick that's holding in the clutch that's tied to this dog over here. And the other guy's the third buddy, he's off on the distance. He's got a can of dog food that he's slowly opening. And so finally, it's like Jeremy Clarkson's talking to the dog. He's like, just pay attention to me. Don't pay attention to the food. And the lid pops open and that dog takes off. The rod comes out of the car. The VW goes over the cliff.
Oh, so, that's great.
It's a great episode. Anyway, VW Bugs. Yes, I do want a truck for the man factor. That's kind of what it is. I'm not sure what prep factor is, but we'll go for that one. Anyway, back to work. So we were talking about, what it takes to be wealthy and really that there's a big difference between wealth on paper and wealth in real life, right? And, it's always interesting to me that people say, well, money's not the measure of wealth, your friends and family are. And that's a true statement. You can have all the money in the world, and if you're absolutely miserable with your life, it's, not important, right? Health, your purpose in life, your family, those are what are a big factor in being wealthy. But we're talking about the monetary wealth, and there's a vast difference today between perceived wealth and what wealth actually is also. And as Danny was talking about earlier, and as we talked about last segment, there's a lot of things that go into creating a wealthy lifestyle. And again, it's not the amount of money that's important. Danny will tell you he meets with people that are very happy. They've got, $500,000 in the bank and their retirement accounts, whatever, and they're retired very well. And they're very happy. And then he'll tell you that he's met with people that have $10 million and they're barely making ends meet. And so just having money isn't important. It's all the other factors that go behind that to ensure that you can live a sustainable lifestyle in retirement and be happy. And then if you're happy in retirement, you're effectively wealthy. And that really kind of comes down to, 7 things that not enough people discuss in terms of planning for their wealth. And this is something that we focus on. We talk about a lot here on the show. Danny talks a lot of when he's on here on the show about, tax advantaged opportunities, et cetera. But these are all things that contribute to actually building wealth. Again, you can have $10 million in the bank, but if you're barely making ends meet every month, it's not going to last very long. And if you're not dealing with taxes and all these other things, it's going to be problematic. So Danny, there's, these 7 things that advisors say that they discuss with these clients, but clients disagree, right? And these are things that are very, very important.
Yeah, I think that it goes back to a lot of things. So just like you mentioned, that there's many people we visit with that are, on paper, many would say are well under that $2.5 million mark that we just talked about, and what people need to feel wealthy. At the end of the day, it's about your perspective, what you need, what you want. But, one thing that there's a study done by PGIM, David Blanchett, used to work for Morningstar, and essentially they talked about things that they interviewed a bunch of clients of financial advisors and said, what are the things that you think your advisors should be doing, but they're not? And then advisors, what is your perspective or your take on it? And I thought it was really interesting because, a lot of times we talk about what are the other qualitative things in life that you're going to do. And as a financial advisor, we have to wear many, many different hats. And so unfortunately, the industry for so long has been, the mindset of maybe even a stockbroker, right? Where they're selling stocks, 20 years ago, that's the way it looked, or a product. Whereas we're beginning to see the movement more towards a holistic type of environment, which I think is really great. All in all, I think it benefits clients. I think that it's going to make advisors become better at what they do, but you're going to have to know quite a bit more. You're not just a stock jockey, so to speak. And one of the things I thought was really interesting is said 7 in 10 financial advisors say they frequently bring up how individuals will spend their time in retirement, but fewer than a third of their clients say their advisors do this. So we talk a lot of times about what's the qualitative stuff? Because, at the end of the day, we're all taught to the quantitative. What is the money? What's the dollar amount? But they never focus on how are you going to use these funds? What is it actually for? And I think we're getting better as an industry of kind of evolving towards that. But if only a third of our clients in general as an industry believe that we talk about how are you going to spend that money, that's a problem. Because here's the bigger issue with this is if we never think about that and we just look at the basic living needs and never dive further into the weeds on this, we're missing out because that money is going to flow and go towards where we want to spend our time, how we want to do it. Are we picking up new habits? Are we picking up old habits? What are the things that are hobbies? What are the things that we want to do in life? And so when we can determine that and get a good understanding, it makes the plan much more accurate. I mean, we tell people all the time, look, if it's garbage in, it's garbage out on a financial plan. If we don't have the whole picture, we are not going to give you a really good, trajectory or an idea as far as where you should be or where you're going if we don't have all the data. I mean, I can't tell you, Lance, how many times we've done plans, and even, a couple years later or a year later, somebody says, I forgot about this account. Oh, you know what? I've got $1 million in gold over here. But that's just an emergency.
Right.
Well, wait a second. You don't think we need a contingency plan within your plan, right? Those are things that we need to be thinking about and adding. So the more information, the better. But then the same goes for how we spend our time because, that is exactly where your money will be going, especially, I know everybody's goal is to get to retirement. You want to have the house paid for. You want to have all these things checked off. hopefully you're out of debt or you're getting near there. But what about all the other stuff? You've got to start thinking about that and how that ties in. And it's unfortunate that the majority of the industry does not talk about that. I feel very, very confident that here we do. So this was one that kind of shocked me because I guess we're kind of in our own bubble sometimes where we're just working in the weeds of this. But, that's a big one, I think. And so there's a handful more we'll talk about that I think are pretty much layups that your advisor should be talking about.
All right, quick break. We'll come back, wrap up the show. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Medicare open enrollment starts October 15th. If you need Medicare insurance coverage, RIA Advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA Advisors online resources and one-on-one partners to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the Insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show. Getting ready to wrap things up. Talking about some things that, advisors say they discuss with their clients, but most clients actually don't agree with that. They say, no, nobody ever discussed those things with me. This is something, I haven't heard of before. And so, Danny, you were just going to finish up that conversation.
Yeah, so, there's a lot of things, and really a lot of that comes back to just the discussion of anything within a financial plan. I'll give you an example. I have a good friend of mine who asked some basic questions not too long ago, and he's done very well. And he said, hey, I called my advisor and I asked him how I should do this. And he just said, so he wants to buy another piece of property. And the guy just said, just go get a loan. And he's like, well, why? And he's like, that's what you should do. And so got a very conservative portfolio, probably not making enough to offset the interest on that loan. And I said, okay, well, how did he come to that conclusion? He's like, I don't know. I was like, well, have you ever done a financial plan? No. Like, okay. So now it's based on what is the decision based on is what I would ask him, like, why? Because it was never done that way. It was just, oh, yeah, don't take the money out of your account. Leave it here. The guy has plenty of money to utilize. Either way, he would likely be fine. But at the end of the day, what are those goals, objectives? What are the near-term goals? Do you need to send kids to college? Do you need a new vehicle? Are you buying a new home? What happens in between here and retirement? And then when you don't have that human capital any longer, how much are you going to live on? What are you going to need? And then what's your legacy intent look like? What are all those things, those hobbies, the things you want to do while you're not working? How are you going to meet that? And so the issue was that he didn't know, and they'd never done one of these plans. So it's difficult, I think, many times to get true advice if we don't have all that information. Now, another one. So we're talking about what clients want and what advisors say they do, and the disconnect between the two. So another one's RMD planning. So a whopping 97% of advisors surveyed said they talked with their clients regularly about how to handle RMDs, but only 54% of investors note discussing this with their advisor. which I think is crazy. Now, I can see where there could be a disconnect here because as an advisor, we're looking at RMDs each and every year. We're thinking about that within the financial plan. We're already doing a lot of that, and maybe we're not doing a good enough job at the beginning of the year saying, hey, FYI, you have X amount that you must take this year. We may have it set up on autopilot. It's right on your statement. I could see how, from an advisor perspective, maybe it's just not communicated well enough. But if you're doing a distribution plan, if you're doing income planning, that needs to be a part of it. Now, if you're pre-RMD age, which is 73 right now, in 2033 it'll go up to 75, you have some wiggle room. And so from another one that they say that is not done well is income planning and tax minimization. So we want to minimize taxes right now is some of the biggest fault that we have when we talk about CPAs. Visited with a CPA yesterday. In fact, I've 2 in the last week. Get to visit with another one today. And, in their defense, we judge them on how much money they save us year to year. So how much money can you save me this year? Whereas we need to start thinking about being a little bit more forward looking. And there are some really good CPAs that do this. But a lot of times it's on the kind of the back of the advisor to kind of drive that conversation and say, hey, let's think about not just today, but let's think about tomorrow, the next year, and many, many years to come. Now, the issue is much of this is hypothetical in the sense that we don't know where taxes will be. Right now we know that if this tax code expires, we're going to revert back to the tax code prior to the Tax Cut and Jobs Act in 2026. So brackets will condense, the numbers will go up a bit, the tax rates. We could potentially end up paying more in taxes. Standard deduction will be cut in half. Estate planning, those estate tax numbers and gift tax exemptions will be condensed in half as well. So, wealthy individuals, you have a very small period of time to make sure that you are doing all you can to fund specific types of accounts. You need to title things in specific ways to shelter and take advantage of this tax code. But the average Joe, who may not have $20, $30 million sitting in an account or more, we need to think about how do we keep more money in our pocket. So as an advisor, tax minimization, 95% of financial planners say they're doing that. Only 64% believe they're actually getting any support. So this income planning, tax minimization, distributions, RMD planning, they're all tied together. But they're also all tied back to that number one thing we talked about, Lance, which was only a third talked about what is actually going on within their plan. And maybe there is no plan. Maybe they're just managing funds. Another one that I've always find is interesting, which is a 4-letter word, is a budget. You have a budget, Lance? I know you have a budget.
We have a flex budget. My flex budget is this. I have a budget. My wife ignores me. So my budget flexes from one month to the next. Actually, my wife and I, the way my wife and I set our relationship up is that she earns very good income with her job.
Mm-hmm. So she spends all the money, you save all the money?
No, sort of, yes. Actually, yes, that's kind of the way it works. But, and part of my income is W-2. You know this, Danny, because yours is the same way. So we live on our so hers is W-2 income, mine is W-2 income. She pays for the insurance through her for the kids and everything through her salary. She does the HSA. She fully maxes her 401k plan, etc. So we've just agreed over time is that we live on our W-2 incomes, and that's our budget. So we run a zero-based budget in our household, which is you can spend every bit of money in the account until it gets to zero, but you can't spend more than that. Everything else that I make through investments or whatever else that we're doing, that all goes into savings.
Yep.
So roughly we save about 70% of what we make. Well, 60% of what we make that gets saved and invested.
I think budgeting is always difficult. It's a 4-letter word to so many. In fact, I prefer to call it a personal spending plan because I don't get looked at like I'm crazy and people kind of, start saying, what? I'm not doing a budget. And I think the problem here is that many people think that our job as a financial advisor is to tell you, you can't spend that. No, that's not our job. You can spend, you can do what you want. It's your money. But if you're hiring a truly objective advisor, they need to be able to tell you no and not be a yes man. And, unfortunately, I see a lot of that just with people trying to gain business because they're like, nope, I want their business, so I can't tell them no. But are you truly doing your job if you can't be objective? You can't take that pragmatic approach and say, hey, if you can do this, but here's what it's going to look like down the road. And, there's many times, we have to do that occasionally. We've got really good clients do a great job. I'm shocked. We get a lot of people that come in, and I'm shocked how well they've already done from a planning perspective. And I'm doing the Roth, I'm doing a conversion, I'm putting funds over here. We've paid down debt. Here's how we're doing it. So, so many thoughtful people that have done a very good job planning who just want somebody to look over their shoulder. But when we talk about, the budget, I think that's tough. So similar situation where, we kind of have a similar situation, Lance, in the sense that, okay, X amount we're going to go ahead and put here. The remainder we're going to try to do our best to save. As long as you don't go over that, we're okay. If not, you're going to be eating ramen noodles with the kids for the next week. That's kind of the budget.
Mm-hmm. Yeah.
And if you get out of those parameters, we're in trouble. Now, luckily, she's way more frugal than I am, which says a lot. I mean, like anything she's ever had that's nice, I probably bought it because I guarantee you she has not done it, which is a blessing and sometimes a curse.
Well, no, my wife is the same way. She doesn't need a lot of things. She asked for her Christmas present yesterday, and she goes, what I want for Christmas is a wet dry vac.
Oh, yeah. See, that's what she wanted last year and we need a new wet dry vac. She wanted another vacuum. I thought, this is not a Christmas present. This is something like you need. We don't have a maid.
Right.
Go buy it. And she's like, no, just that's what I want for Christmas. I'm like, that is absolutely ridiculous.
That's what I told my wife too. I was like, no, I'm not buying you a wet dry vac for Christmas. But she's like, no, seriously, that's what I really, really want. I really want one because we have this porch that gets leaves on it and stuff, and she just wants to be able to basically vacuum the porch. And I'm like,
there's a thing called a leaf blower.
But that just this house that we bought, right? The previous owner, they astroturfed the backyard. Yep. It's not a very big backyard. It's got a pool, and they astroturfed the backyard. So if you just blow leaves into the backyard, now you have leaves on your astroturf. Yeah, and it goes in the pool. So you've got to suck them up. Anyway, so she's very excited that she thinks I'm getting her a wet dry vac for Christmas. I'm not, because I want to stay married.
Well, my dad told me that years ago. It's just probably 15 years ago. He said, hey, what are you getting Michelle for Christmas? I said, oh, she wanted a vacuum or whatever it was. And he kind of looked at me, or a blender.
Like, are you stupid?
And he's like, what? It was like December 24th. I was like, yeah, that's what she said she wants. She's not going to want anything else. She's like, you better run the jewelry store right now, son. It's like, all right, touche.
Yeah, no. There's what they say, and then there's what they mean, and you better be able to stay married. The trick to staying married is to understand that big gray area between what they say and what they mean.
Well, you know what I find, though? Half the time I go get the nice thing, and then she's like, takes it back. She's like, I don't need this. How much was it? I'm like, just stop. Don't even look. Don't worry about it. We're good.
Right there with you, man. Feel your pain. All right, wraps up the show for the day. Be sure and smash that like button. We certainly appreciate it. It's helping grow our channel. And we need your help to do that. So your help is very much appreciated. Get by the website, realinvestmentadvice.com. Michael Leibowitz's latest article is out talking about volatility. We'll discuss it tomorrow. And of course, as always, you have questions for Danny, whatever you can do, simply hit the ask a question button. realinvestmentadvice.com. See you back here tomorrow.
CPA should only worry about the